after this Monday's and last Friday's correction, PSU stocks have bounced back in a big way. The BSE PSU index has not only recovered what was lost, but has rallied on top of it. And the brokerage, I was reading a lot of these reports from brokerages, they are divided on whether the PSU stocks can continue this tremendous run that they have been on. What's your take on this entire issue of the rally in PSU stocks, sir?
So when we talk about PSU stocks, I would keep into two buckets. One is the PSU banks, and another is the PSUs in other sectors. As far as these other sectors are concerned, whether it is defense, railways, renewables, clean energy, I think in that space, clearly stocks have run up a lot, and the valuations are definitely not in favor for investors to get in. So anybody who, like us, who follows a certain valuation framework, if you want to buy cheap valuations, I think that that moment is pretty much gone. It was there about 18 to 24 months ago, but now with the strong rally and with execution and payments to come, that needs to be seen how much they comes, and we are heading into an election season where the capex will be really slow. So a lot of these sectors are, I think, overvalued, especially in defense and railways. So we are not looking at those positions. In fact, in the last couple of months, we have actually sold out all the PSU names which are there in these sectors. But as far as the PSU banks is concerned, I think there could be some potential upside still left. They are experiencing a re-rating due to exceptionally low credit costs, better asset quality as compared to, let's say, private banks. They have resulted in higher PAT growth compared to private banks. Their profits are driven by reduced credit costs, robust AUM growth, and the perception has changed. So all these PSU banks, were very under-owned 18 to 24 months ago. And with the significant earnings improvement coming even in the December quarter, as compared to, let's say, private banks, that numbers has sort of led to again a very sharp rally in the past few sessions. So I think the valuation gap has also now sort of cramped a little bit. Private banks used to trade at 2.5 to 2.8, 3 times books, whereas some of these PSU banks were trading at less than less than a book. Now I think that valuation gap has converged a little bit, and that's why you're seeing a lot of PSU banks outperforming the benchmark indices and also the private banks.
But are the valuations looking attractive? Because of course the PSU banks have run up quite significantly. So a lot of them have turned multi-baggers, and you put it out there that the valuations were rather cheap and they were under-owned. But now, as things stand, how are they, valuations-wise looking?
No, valuation wise, I think they are still a little cheaper, especially the top 4, 5 banks in the PSU space. They are still cheaper than some of these private banks. So can be a valuation, converging call which is happening. I won't add, into my existing positions, but I think whatever positions we have, we like to stay in it for some more times. What is also happening is that these PSU banks are actually better placed as far as the liquidities are concerned as compared to the private banks.
Right.
The recent MPC decisions also on the withdrawal of accommodation to contain inflation, that is sort of unfavorable for the private banks. But the PSU banks are actually much more comfortably placed in their liquidity. Their source of funding through the borrowings is there, the surplus liquidity is there. I think LCR is about 125, 140% on an average for these PSU banks. So I think in short terms, they look a better bet than the private banks, and I think some sort of upside can also be expected out of that. The one word of caution is that the bottom rung of PSU banks, I think there is a bubble there, because these are very low float stocks where about 1.5, 2% or sometimes even 4-5% float is there. So I
Right.
think there is a sort of a bubble which is happening. But the top 4-5 PSU banks, I think one should be safe there.
And since the float is so low, are you concerned about the disinvestment drive that the government will perhaps go on after the elections? Because the SEBI has the rules. It has a timeline of about, I think, a couple of years to meet the minimum public shareholding norms. And some of these, public sector banks and some of the other PSU stocks, the government holding over there is over 90%.
Yeah, so in the case of PSUs, not just PSU banks, even some of the PSCs also, the minimum shareholding, the minimum public shareholding, tends that deadlines always tend to get pushed ahead with SEBI's approval. So what we have seen is that a lot of these companies are not able to meet up their MPS limits, which is a concern as far as divestment is concerned. But there is no fixed timeline to it. We don't know. I mean, the divestment for a couple of PSU banks we have been hearing the headlines for over 3 years now, and nothing has happened. I think even after the elections, it will be very difficult to get sellers or buyers for these PSU banks at these valuations. The valuations really need to come down for anyone to get interested. I don't think a bank which has got more market cap than any of the top three PSU banks.
Right.
Or rather, number two, three, four. I don't think anybody will be interested. So there could be a crash in the valuations post the elections.
Wow, there could be a crash in the valuations of some of the low float PSU banks because of the government's disinvestment drive to meet the minimum public shareholding norms. That's the word coming in from Amit Gupta. So, always a pleasure speaking to you. Thank you for joining us here on News 9.
Thank you, Suyash. Thank you for having me.